Good evening, ladies and gentlemen. Today is the 10th of May, and today was a very interesting day in the market. We saw on Friday, I pointed out as well, that there was a lot of deep in the money put writing all the way up till 15,200 and very frivolously massive amount of put side open interest on the 15,000 put for this expiry. And if you take a look at what's been happening in monthly as well, there has been consistent call unwinding at lower levels and put writing at 15,000 and 14,500 evident today as well. So that being the case, we gapped up, and what I wanted to do is to relatively not expose myself to the kind of option pricing reshuffling that would happen in a gap up situation. I waited for the first 45 minutes to enter the trade. This didn't particularly work out too well because there was a lot of fall off in premiums in the first 45 minutes. However, it also did not expose us to any kind of big move in case we saw a gap up and then a continued up move, which would have really spiked the call side. So that being the case, was a relatively good day. Managed to return something like 1%. And I also at one point you can notice I exited the trade completely because my estimation was that the potential reward of staying in the trade was not too high, and I risked off by cutting the leverage, cutting the sizing, and increasing the width of my position as well. So in a way, it wasn't the best thing to do because today was a very peculiar Monday. Expiry being on Wednesday this time means that options are going to lose a lot more value on Monday than they otherwise would. But even by those standards, I think options premiums are extremely low at this point of time, and market positioning continues to be on the bullish side with people frivolously writing in the money calls in weekly as well as monthly expiries. So if this continues, we'll probably see another gap up tomorrow as well. And I got asked a question as well after someone watched my Friday video. They said, okay, if you saw all this in the money put writing, why didn't you take a bullish position overnight? It's because that's just not how I trade. It doesn't sit well with my risk management when I know that I have an overnight position. I have to worry about whether some news will come in, because OI is not a hard science. You can't say, okay, OI is indicating this, so this is exactly what's going to happen. Also, OI is a double-edged sword. You see that many bullish positions so aggressively being created. Imagine if that aggressively they start getting unwound. It can also mean that, okay, range break did not happen and you continue to stay in the same range. So it doesn't sit well with my risk reward to take BTST of that nature. And lately markets have been very treacherous at times. So data might suggest one thing, but the action moves something else, which we have seen back to back when market data was suggesting relatively bearish positioning, but we kept seeing up moves through short covering. So regardless, I hope you had a good trading day. If you were on the option selling side, it should have been fine regardless of what you were doing. And if you were on the option buying side, it would have been very, very, very tricky to make any kind of money. So that being the case, I think overnight we should not see too much decay in option premiums because there's hardly any value left in them to begin with. And yeah, I will see you tomorrow. I hope you have some good takeaways from this video. I think the only takeaway here is that at a point where I felt I was comfortable with how the day had gone, I just took risk off, took leverage off, and just simplified my exit criteria from there. Thank you so much for watching. Have a great evening. Also, just to add this, so I'm going to be working from home for at least the next week from what it looks like. And yeah, it's because the place where I stay is in complete lockdown. And I apologize for the quality of audio. If anything, that would have taken a slight hit. And also, I'm using a different computer to track certain stuff. So I'm not able to show everything on the laptop screen itself. So that inconvenience is going to be there for a while. Hopefully, I'm able to address that soon.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. So, working from home today, and we're having a gap up situation. We're opening above 14,930, and the idea will be to take a back seat the first hour and let the volatility come to a consensus on pricing. Puts are gonna lose a lot of value as they have overnight, and that's because we have gapped up, and calls will slowly keep gaining on the IV side. and we will slowly but surely see a fall off in that call IV, but pretty good expansion of put side premiums if we then see some kind of a reversal towards Friday's close. Okay, have entered the position, entered around 9:45. So waited for half an hour for prices to settle down and normalize to some extent. It was a pretty good fall off on call side IV, and there should have been good DK in the morning, but kind of missed out on that due to the fact that did not want a big move right after the open and mispricing of options to put us in a bad spot. So that being the case, it's almost 10 o'clock, and we're seeing a lot of put writing in the monthly at 14,500 as well as 15,000 short straddles in the monthly. And in the weekly, we're seeing call unwinding at lower levels, everything below 14,900, and heavy put writing at 14,900 and above. So put writing all the way till 15,200. That being the case, if anything, the bigger fear will be that we see an up move which really explodes these calls. For now, these puts are not too much of concern, but yeah, we'll keep you posted. The idea, more or less, is that in case we start hitting here and break Friday's high, then we'll have to do risk management on uh, the downside, and we start heading up and start testing 15,000. We'll have to do risk management on the call side. Okay, just one change made is I have booked the 14,700 puts and moved them up to 1750 because the fear of a call side expansion is quite high. I didn't do it at the best pricing, but had to do it at a point where we were potentially breaking out above 14,950. Regardless, the calls once again deflated has balanced the fact that the puts that we moved up are slightly bleeding. So um, that being the case, it's about 11:30, and considering that expiry is on Wednesday this week, these options don't have too long, and currently the width of the strangle is 350 points, trading at something like 67, 68. Still a good trade, and more or less since I'm at 3.5 point profit, the idea will be to keep protecting that. In order to protect that, I had to move up the puts, and yeah, for now this is the position. Okay, so market continues to slowly but surely head higher, and this is being backed up by data as well, where we see very strong put writing till 15,000 and even above 15,000. So that being the case, to protect the calls some more, have moved up the puts to 14,800. What this does is uh, gives us a little more delta hedging towards the upside and neutralizes our delta more or less at 1950, which is where we are. The reason I'm still holding on to these calls is because I believe something like 15,000, taking it out intraday is very difficult. You'll see a lot of people who are long at around 15,000, they will feel the urge to book profit because 15,000 being such a big psychological level. So something like 15,000 has to get taken out by a gap. So that being the case, still the calls continue to expand, which is not great for us. But at this point, I'm just trailing in the stop loss for the day. Right now, we are in a slight IV expansion, and yeah, the idea will be more or less trail in stop loss for the day and try to lock in more or less at least 2 points. We'll keep you posted. Time is 12:50. Currently in an IV spike, so do not want to do anything at this point of time. Position more or less is balanced, so a 30-point move on either direction should not have too much of a mark-to-market impact. In fact, if it's on the downside, it should actually benefit us because of the way calls have expanded. Okay, slight issues with the recording since I'm working from home, messed up the macro. Basically, what I did was during the up move, and I'm using the different computer for charting. So during the up move, I had to move my puts up at different points to balance the calls. So move them up all the way till 14,800. Now what happened is when we saw these red candles, it's a great opportunity to exit the call side because the entire market being on the long side was long and I was short the 14,100 call. This call crashed a lot. In a matter of 5 minutes, it lost about almost um, 6.5, 7 points. Right, so this call lost a lot of value. So I used this dip as an opportunity to exit both the put as well as the call, because the put hadn't expanded much. The put hadn't expanded much, whereas the call had lost quite a lot of value. So use that opportunity to exit the entire position. And more or less that is locking in the profit for the day. Now what I have done is, since we still have quite a lot of time left to go, I've created a much safer 14,700, 15,150 strangle. And I've done this without any hedging benefit. So the leverage is also lower and position sizing is also lower. So more or less at this point, the idea is on this sizing, we'll be trailing our stop loss by 3 points. So regardless of what happens, we'll still be up about 0.7% on the day. So that's one way of locking in the profits, by changing the entire risk reward of the spread itself. We'll keep you posted. The time is 1:30. We've got 2 hours for market close, and I'm not expecting too much of a move. Overall, what I can see, and even here with the down move, the idea was that we would dip probably till 14,900, and then that would see buying, unless there is some kind of rapid long unwinding that gets triggered, because a lot of long positions have now been built up, not just in the weekly expiry, but also later dated expiries. Okay, we're into the last 40 minutes, and yeah, basically still the same very risked off trade, um, which has a slightly positive delta at this point of time. Just trailing in my stop loss by 1 point, and yeah, last 40 minutes, not expecting any further massive fall off in prices. But yeah, today has been a surprising day for Monday. You don't say this kind of DK on a Monday by any standard, even assuming Thursday is a holiday, so Wednesday expiry. Even then, it is, even for a Tuesday to see this kind of pricing is quite surprising. We're seeing the at the money short straddle being worth less than 180 points on a Monday for the weekly expiry. That's almost something you never see. Yeah, we're having a slight dip at this point of time. Put side is spiking in IB. We have a mark to market exit more or less, which is around 320. So if that hits, then we will just start cutting the position. Okay, trailing stop loss is hitting, because last minute there is a slight down move and it's expanding the puts. This is natural. It has to be some kind of an IV expansion the last minute, considering uh, yeah, considering that there was an insane amount of value lost in the options towards uh, the entire day. Anyway, good enough outcome for the day. More or less exited at the same point from where I re-entered. Um, yeah, should be interesting. I mean, from the way options data is looking right now, once again, bias would definitely be towards an upside range break. A lot of monthly positions also taking into account for the fact that we'll probably be breaking range on the 15,000 side. So thank you so much for watching. I hope you had a good trading day. This would have been a good day if you were on the option selling side. Regardless of which side you were on, it would have been an all right day. And yeah, very peculiar sort of Monday, but these things happen when expiry gets expedited. Thank you so much for watching. I'm sorry for the relatively lower quality of audio and video. I just working from home, so don't have access to my usual setup. Have a great day. Thank you for watching.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.